So we are just doing some analysis in the live room on gold, and we're just going through the whole Ipde process that we use to involve ourselves in trades in the market that allow us to enter the high probability trading opportunities that present themselves by being, by having a rules-based trading system and having almost, I always like to say it's like a board game set of instructions. It allows you to be consistent. It allows you to approach the markets the same way every time you come into the markets. And that's really what's required in order to generate consistent profits out of the market. So we was doing a little bit of analysis on gold. And we're gonna go through the whole process, that Ipde process that allows us to enter a trade. Okay, so essentially what we're looking at is this as our starting point. Okay, you can see we had our little double bottom down here. Market ran out of steam. We saw some divergence on the RSI, equal test to the lows. We had our double bottom, and then since then we pushed up. Okay, so I'm going to call this our starting point. Okay, this is our starting point. We then have our initial high. So this is our initial high. Okay, we then have a pullback, which we refer to as an outside return. Followed by, we had some consolidation in here, but we had a new structure high. Okay, so new structure high. We then follow that up with a new outside return, and remember the outside return is valid until it breaks and closes below the previous outside return, in which case we may see a rotation or reversal. All right, so we can see we're putting in higher lows. We then put in a new structure high, so let's call this new structure high, followed by, you guessed it, outside return. Okay, and again, the outside return's valid until we violate this outside return here. So we've got higher low, higher low, higher low. Our Ipde process, so Ipde is identify, predict, decide, and execute, or entry technique. Okay, so this is the process we're going through. We've now identified a bullish market. Okay, we're bullish, so we've identified market's bullish. We're going to predict where we're likely to see market test next. Well, if we're bullish and we're looking for a trend continuation, we're looking for at least a retest of these highs, right? A retest of these highs, and this is the daily time frame, remember. So when we drop down to our trading time frame now, we've done the I and we've done the P. We've identified the market's bullish. We've predicted where market's likely to go next. In fact, let's just drop down. Let's put in a horizontal line here. Drop down to our trading time frame. You're going to see we've predicted where market's likely to go. All right. So now all we have to do is decide how we can get involved. Now this is where we start to really narrow down and build out our entry technique. Now you can see we've put in a higher high here, followed by an outside return, followed by a higher high, followed by an outside return, and we've just put in a new structure high, which means what? We can get a pullback down into previous structure, a new outside return, and we want to buy this up if we can get our entry rules met. So what we do is we wait for a pullback and we can build out our kill zone. We know that our stop loss needs to go below this low. We also know, or I also know, that I want to get a 1-to-1 and I want to take my first profits off at a retest of this high. I want to take some of my profits off the table at a retest of this high. Okay. Trend following traders, you might have your targets at an extension initially. I want to take some profits off first, and then I want to trail my stops up for my second position up to this high, and I'll show you how we do that right now. So first of all, I'm looking at an initial kill zone down here. I want to know that I'm getting a minimum 1-to-1. So if my stop loss needs to go below this low, I can work out where my stop loss needs to go. Whoops. My stop loss would go around this level here. Okay. We're looking at this being my risk. We can then bring on our fib retracement tool just to quickly get out that 50%. See, I've drawn that on already. So we know that we're going to get a minimum 1-to-1. We can narrow this down. This is now our kill zone. And our targets, our worst case scenario targets, for target 1s are going to be at this level here. So we now know that we need price action to push down into this zone. And then you can look for your execute technique. So we've decided that we need price action to push down into this zone here, looking for a trend continuation approach. And then we need to get our execution in, our entry technique. And for me, that'll be a higher high, higher close candle. If we get a higher high, higher close candle, then I can enter next bar market. I can take some profits off at a retest of these highs. All right. Now, what I'll do is if my stop loss is here, and I'm going to color this in red, and I'm going to thicken this up. If my stop loss is here, as soon as we hit targets, I'll move my stop loss to break even. Okay. I'll move my stop loss to break even wherever it is that I enter. So then I can't lose on the trade for my second position. And then what I'll do is every time we put in a new structure high, bang, I will move my stop loss to below the outside return. And I'll carry on doing that. As we approach this level, I can't move my stop loss yet. Can't move my stop loss yet until we break and close above. Then I can move my stop loss. See? And that's how you squeeze extra profits out of the market. You've identified a bullish market. You've predicted where it's likely to go next. You've decided how you can get involved. You've executed the trade, and then you're in. Trade management for me on this would be taking some profits off at a retest of the highs. So I bank some profits, trail my stops to break even so I can't lose, and then trail stops up to a retest of this high. Okay, and two things will happen. This will be my sell stop order. This will be my sell limit order, and I'll either sell the rest of my position back here if price action just pushes straight up, or as I'm trailing my stop loss up, we may get stopped out for a profit as well, where I'll be selling my position back a bit of a worse price, but we'll still be in profit. Now, just before we, hopefully that was quite clear, but just before we finish, there is one more type of, well, there's a couple of ways I could get involved with this, but the most aggressive that seems quite popular is if we was to get a pattern entry. Okay, if we get a pattern entry in this situation, a bat pattern, Gartley pattern, as long as we don't retest these highs already, then you could look to use this as your entries into the trend continuation trade. So you've no longer got to wait for that higher high, higher close candle. Does that make sense? All right. So that's the analysis on gold. That's the IPDE process. That's what I use in my trading every single day. And if you want to learn more about this and be surrounded by lots of like-minded traders, then make sure you come into the live room and you'll get to see this stuff every single day.